Welcome everyone to our sort of annual-ish webinar on tax scams. We're going to talk about recognizing these tax scams that are out there and how we can avoid them. As some of you know, periodically I get very angry at all the tax scams being sold to the transformational industry, and so I channel that anger into doing a webinar for all of you guys. So let's get through it today. So before we get started, you guys know I love to do this when we talk about taxes, right? Just drop it in the chat. When you think about dealing with taxes, how does it make you feel? What are the words and emotions that come into your minds? No right or wrong answers. There's no positive or negative. There's no right or wrong. There's only what sort of words come to your mind. Dread, yeah, I've heard that one a lot. Confused and worried. And you like the organization. So do I. I'm a tax nerd. I'm a tax lawyer. So for me, it's just a giant logic puzzle. So I get that totally. Angry and afraid, frustrated, feel like you pay too much. Yeah, all that stuff comes up. Totally get it, right? Taxes are a very logical subject, but like any other logical subject, our logic does not even come into play if we can't first get in touch with how we feel about it, which is why I always go through that little exercise to start. So lack of tax knowledge and feeling of empowerment, it leads us to let those problems fester until it's too late, right? Anxiety sabotages our business building and our ability to earn income. I've seen a lot of people give up clients, give up income because they didn't want to become more visible. They were afraid of the tax issues. And of course, what we're going to talk about this evening, you become susceptible to the tax scam artists if we don't have that knowledge about how the system works. And then, of course, not taking advantage of the benefits the tax system has to offer. If you're a small business owner, our tax system has chosen you as a winner. So let's start acting like winners. On the other hand, if you feel knowledgeable and powerful, you can eliminate problems before they arise or before they get out of control. You have a lot of confidence, right? So you become more visible. You're not afraid. You don't sabotage yourself. You avoid those hucksters who are trying to sell you the magic tax beans. And you get to use the system and realize all the benefits in place for small business owners to reduce our tax liability ethically and legally without taking advantage of scams like the ones we're going to talk about this evening. So what are we going to do right now? We're going to talk about some warning signs for bad tax advice, examples of scams that I want you guys to avoid, including scams that are being sold to the transformational industry right now. These are common scams that are being sold right now. That's why we're going to talk. And why following the rules can help you grow and scale. If you're able to stay, we'll have opportunity for some honest and practical guidance on how to overcome that tax anxiety and some Q&A time at the end. So a lot of you know me. For those who don't, I'm Ian Foster. I got my law degree from UC Davis going on 25 years ago. I am still a licensed practicing attorney in the state of California. I spent nearly 2 decades in government service in multiple government tax departments. So I have actually audited, investigated, prosecuted tax scams and tax shelters, and helped put some of those folks in jail. So now I'm trying to bring that inside knowledge to you guys. Before we get too far, my standard disclaimer, you guys have seen this before, right? This discussion is not legal services or advice. This is educational in nature. This talk represents my opinion only, does not necessarily represent anyone else's opinion on the subject. I cannot guarantee any specific outcomes or results. I can't guarantee you will avoid any investigation or audit or successfully defend against an investigation or audit. And let's all be respectful of one another and make sure this is a safe space for everyone. So those warning signs. And also as we get into it, if you guys have questions, raise your hand, drop it in the chat. You guys know I'm pretty informal about this stuff, right? I don't try to structure it too hard. So put questions in the chat as you think of them, or raise your hand so we can address it right away. I'd rather address things while you're thinking of it, while it's timely. And remember, if you have a question, it's likely a lot of other people have the same question, either people here or people on the recordings. So let's watch out for those red flags. So one of the biggest warning signs when it comes to some sort of tax scam or some sort of tax thing you don't want to get involved in are what we call transactions that lack a non-tax business purpose. Legitimate transactions, they tend to make sense in your business apart from the tax consequences, meaning you would do it regardless most of the time. That's what we call a non-tax business purpose, is when you have a good business reason for doing something before you even get to the tax consequences. On the other hand, what we call abusive transactions or scammy transactions, they only make sense when you start looking at the tax benefits they create. In other words, ask yourself, if not for the tax benefits, would I still do it? Right? Now, that doesn't mean it's always a scam or always abusive, but that is one of the red flags you look for. Right? Always ask yourself, if not for the tax benefits, would I still do it? If the answer is no, there's a possibility that it's kind of a scammy or abusive transaction. You always want some sort of reason for doing it apart from the tax benefits. The next big warning flag are what we call circular transactions. And a circular transaction is exactly what it sounds like. Right? The money flows around in a circle. That's why we call it a circular transaction. A pays B, B pays C, and C pays A. Money flows around in a circle. By itself, there's nothing illegal about circular transactions, and you may have good reasons to do it. Right? There's nothing wrong with one of your businesses paying another one and paying it right back. There are lots of perfectly normal and legitimate accounting and business reasons to engage in circular transactions. The problem is if we are using those circular transactions to hide the income or generate artificial deductions. Right? And often that happens when, if you're doing a circular transaction properly for good business reasons, it's usually going to be a wash for you. You're going to report the income on one side, the expenses on the other. It's probably not going to be a big tax savings. But the problem happens is if we're paying money around in a circle and we're using it to generate, say, tax deductions or hide income, and then we're not reporting the income on the other side. Very similar to circular transactions are what we call offsetting positions or wash payments. So an offsetting position is when you take two positions that offset economically, meaning you're neither making or losing money. And very similar, a wash payment means you're making payments in different directions in ways that are a wash for you economically. You're not making or losing money. Again, there's nothing illegal about these per se. Sometimes in investment, there are strategies called straddles. You may have heard of a straddle in an investment context, which often creates wash payments or offsetting positions. And there are lots of reasons to do that from a business perspective. Again, though, the problem is when we use these artificially to hide income or to generate artificial tax deductions. So there are lots of things that are perfectly legal to do from a business and accounting perspective. You just can't use them as an excuse to get out of paying taxes. Trust your instincts. This is a big one, right? Look out for what we call magic bullets. Remember that every tax benefit has a corresponding economic cost. That's literally the way our tax system is designed and supposed to work. Right? A tax benefit has an economic cost. They don't come out of nowhere. So if someone is selling you on a tax benefit that seems to have no economic cost, there's probably something wrong there. Watch out for pressure to act quickly. A lot of these people who try to sell you on doing tax stuff, they got to do it now, 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 now. Very pressured. They don't want you to go investigate it, talk to your lawyer, talk to your accountant. They don't want you to do that. They want you to buy it now. And watch out for people who make money from you doing it, right? They tell you, here's a great way you can save on taxes if only you pay us a bunch of money to set it up for you, right? That means they have a financial interest in setting it up for you. Look out for outrageous claims. I fought the IRS my whole career and beat them every time. You guys ever heard anyone say stuff like that? right? I've been fighting the IRS for decades and I always win and I always beat them. Look, I was a government tax prosecutor for 18 years. In 18 years, I'm curious, you guys drop it in the chat. In 18 years, how many cases do you think I lost when I was on the government side? It is more than zero. I did lose more than zero cases, right? I didn't win every single case in 18 years. Jane says 10. I lost fewer than 10 cases in 18 years, right? There you go. A couple of you said one. Yeah, I lost one, right? Probably the hint was when I said it was more than zero. In 18 years, I lost one case as a government prosecutor. So if somebody is telling you that they always beat the government, that ain't right. They don't always beat the government. The government wins almost all these cases. That's simply how the system works. And the classic line, you guys have all heard this since we were kids, right? If it's too good to be true, it probably is. And this is especially true in the tax context. Any questions on any of those warning signs before we move on to looking at the actual scams? All right, let's look at some.
I do real
Yeah,
quickly.
Norma, go for it.
If you get an email
Mhm.
from like a company wanting you to donate for animals or donate for somebody running for Congress or whatever, could those possibly be scams?
Maybe, I mean, not necessarily tax related, but there's there's all kinds of charity related scams out there. I don't know, you know, you'd have to see. I mean, if you get it, if it's from the SPCA, they're like a legitimate, you know, speaking of
Right.
animals, the SPCA is a real organization, right? And I've donated to the SPCA.
Yeah.
So who knows?
Yeah, I mean, because there's other companies that I look at them as scams. You know, they want something, but you don't really know if they're legitimate or not. So I don't do it.
Yeah, if you're not sure, then don't do it. Mhm.
Yep.
Personally, when I make charitable donations, they are to organizations that I already know they're a legitimate organization.
Yeah. Okay. Thanks.
All right, so let's look at these common tax scams. They're a lot like magic card tricks, as you're going to kind of see, right? Some of them are not even that sophisticated. They're basically sleight of hand. So this is a common one being sold real hard to the transformational industry right now. Have your business rent your house. Now, by itself, this is legal. Your business can rent your house if you have a legitimate business purpose and if you document everything and report everything properly. There's nothing illegal about that. People do it, and it's fine. What's not legal is creating tax deductions without reporting the corresponding income. Right? So there's actually something in the law, we call it in a colloquial term, it's called the Augusta rule. The law does not call it that, right? But it's kind of the everyday term for it in the industry. We call it the Augusta rule. It says that you can rent out your home, your personal residence, for up to 14 days without reporting the income. So here's what people do is they say, all right, so I'm going to have my business rent out my house for $1,000 a day for 14 days. And I'm just going to have my business pay me $14,000. I'm going to claim the deduction and I'm not going to report the income. It's magic. Out of thin air, I have created a $14,000 tax deduction. I haven't outlaid cash to anybody else. I get to keep all the money. And boom, look at, I just get to deduct it, right? It's magic. So what's the problem there? Is this something you would do without the tax benefit? Right? If there was no tax benefit, would you even bother to do it? Writing up the paperwork, making the payments, doing all of it.
It's stealing.
It's a little bit like stealing, yeah. What do you guys think? Are the payments basically circular or a wash? You're just paying yourself. Sounds circular to me. It sounds like a wash.
Oh.
Yeah, Jane, now if you report the 14K in income, it's not a problem. Right? You can deduct it on the business side and report it on the personal side, and there's no problem there because you're not creating a magic deduction, right? You're doing it right on both sides. And some people do that. The other big problem with this is what happens is people say, let's say I'll rent out my house for $1,000 a day without actually like looking into it and seeing like would my house rent for $1,000 a day if I did it on say Airbnb, right? Do they actually look into it to see what the rental value of the house is on a daily basis? And then also they'll rent their house out to their business, and then because the business is renting for the house for that day, you should not be using your house for personal reasons. A third party is, if you rent your house out on Airbnb and somebody rents out the whole place, you got to leave, right? You don't get to stay unless you're just renting a room, right? But then have the business rent a room. Yeah. But people then stay, and what? They use their living room, they use their bedroom, they use their kitchen. Nothing changes. They're still using the house for personal use. Yeah, Mike, exactly. What is the rental market value? Now you could, again, there are legitimate ways to do this. If you want, say, your business to rent out your living room so that you can do videos for your business because you like your living room, right? Mike, I happen to know you have a very nice living room, great place to do videos if you wanted to, right? You would have to figure out what is the fair rental value of your living room, either by the day or by the hour, just the living room. You have your business pay you, and then you better make sure you're not using that living room for personal benefit at the same time. Right? But also this rule was designed for people renting out their entire houses, not a few square feet. Right? The rule was designed with in mind that people would leave their house for 14 days and rent it out. And typically the people doing this in order to generate these artificial tax deductions, they are not leaving their house for 2 weeks, right? Because then you have to go rent a hotel for 2 weeks and you're all of a sudden it's not a benefit anymore. Jane, it is typically, if you do it legally, Jane, you're right. It is typically a lot of trouble. It can be done legally, but it's a lot of trouble to do it legally, and it doesn't really save you all that much money. Right? But people don't want to go through that trouble. They just want to generate the magic tax deduction. So then again,
And
we
what
asked, is it,
happens?
sorry, go ahead.
Yeah. Suppose you let the person use your living room and you don't charge them at all, then there's no anything out of sync, right? Because there's no
Yeah.
money being exchanged.
Yeah, right. I mean, look, I've used our living room and our fireplace as a background to record some of my pre-recorded evergreen content.
Mm-hmm.
But I'm also still using it for personal reasons at the same time. So yeah, I don't pay money back and forth. I just already here.
Right.
This is also a big problem. Sometimes you see people doing this even as they're claiming home office deductions, right? So then you're claiming home office deductions for business use and business rental use. It becomes a huge audit target.
Yeah.
And this is an audit target, right? This is a huge audit red flag. You are much more likely to get audited if you do this. Seems like magic, right? So it's a big red flag. And do you think there are people out there who are charging you money to help you set this up? Right? There's a whole industry of people who say, we'll do the market analysis and we'll set up the rental documents and we'll document the business purpose, right? Of course, they charge money for all that. It's not free.
So how is
Person,
that a scam?
how is it
If
a
they do
scam?
that,
Yeah.
yeah.
Because they're charging you money to set this up, which means they have a financial incentive for you to claim this magic tax deduction. And the bigger the tax deduction you claim, the more money they're going to charge you. So their incentive essentially is to get you in trouble. They make money by getting you in trouble.
Oh, okay.
Yeah. And of course, if you read the fine print for them, like you can't sue them, right? Because when you sign up with them, all their fine print says they're making no promises.
Ah,
Another very common one, having your business pay your kids. Again, by itself, this is totally legal. Nothing wrong with that, right? My parents ran a manufacturing shop when I grew up, and I used to work in the shop and I got paid to do real work. You know, I started from the ground up. I swept floors and cleaned toilets and got paid for it. You know, worked my way up to running the night shift and being a supervisor, got paid for doing real work. That's fine. You can do that. As long as your kids are doing real work and you can document it, there's nothing wrong with your business paying your kids to do that. Indeed, if your kids are minors, they can receive up to, I think the last I checked for this year, it's $13,800 in earned income, and then your kids don't have to file returns as long as they don't earn any more than that. Right? The question, you'll notice there, I have it underlined, earned income. So let's say you pay your 15-year-old daughter $13,000 for helping you sort paperwork, develop your website. She has her own bank account. She deposits some money in her own bank account. There's nothing wrong with that. That's totally legit. She's doing real work. She gets to keep the money. You get to deduct it because you're paying someone to do work in the business. There's nothing wrong with that. Here's where we went into trouble and where it starts to be a scam that people are selling you. What if your kids are too young to do any real work for your business, or they don't want to? So let's say your daughter is not 15 years old, doesn't have her own bank account, right? Is not actually helping you with real work. Let's say your daughter's 5 years old. And let's say you want to use your daughter's picture in your marketing. So you pay your 5-year-old $13,000 to use her picture in your marketing. You guys see where I'm going with this? Since she's 5, she can't really control a bank account, right? So who does control that $13,000? Not the 5-year-old. You do. So you're not paying a 5-year-old, you're paying yourself $13,000. And you get to deduct it, and your daughter, you'll say, well, she doesn't have to report the income because it's under the threshold, right? But really, you've just given 13 grand to yourself. It's magic tax deduction. You have no outlay of cash to a third party. You don't give up control of the money. Antoinette, possibly, but 5-year-olds don't really file tax returns, right? Usually for someone that young.
yeah, but suppose she really did do it. I mean, you did use her picture or whatever in your marketing materials, and she's 5 years old. Why couldn't you just deduct it as an expense, advertising expense?
Well, because here's why, is because number one, you're not outlaying cash to a third party. You're keeping the money because the 5-year-old can't control money. Right.
Oh,
So
I see. It's
yeah,
not
so that's
going
part of
out to
the other
any.
problem is, how do you decide what your 5-year-old's picture was worth? You will find conveniently that people come up with a whole analysis of what their 5-year-old's picture is worth. And conveniently, all of them happen to reach the conclusion that their 5-year-old's picture is worth just under the threshold for reporting money. Right? So if the threshold is 13,850, all of these people are like, well, my 5-year-old's picture is worth $13,849. Right? But how do you determine what your 5-year-old's picture is worth versus another 5-year-old's picture? And then, of course, your 5-year-old is not legally competent to sign any contract to that effect. And then the other problem is people are misreading the law, because the law says they get to exclude earned income. Well, paying your 5-year-old 13 grand for her picture is not earned income. So even then it doesn't work. Earned income would be like performing services, like doing paperwork.
I see. But
Yeah.
if she was 12 12, 13, 14, 15,
Mm-hmm.
then you could open an account for her and put the money in there, and then you could legitimately
Yeah,
claim.
and have them do them real work, right? So my wife and I have done that with our teenagers before. I mean, we're empty nesters now, but back in the day, you could have a 13-year-old who can do, like, they can help you sort through paperwork, they can help you file things away, they can help you update your website. I mean, 13-year-olds are very capable nowadays, right? It's crazy what they
Right.
and then you pay them real money and you put it in their account that they control. Now that's different than
Gotcha.
paying a small child for using their picture on a website.
Well, let me ask you this.
Mhm.
If it was set up legally where a 5-year-old could be paid, and even though she doesn't have a savings account or a checking account or anything,
Mhm.
if it was decided that she could be paid, then that would change the game, right? And make it
Maybe
okay.
the problem is a 5-year-old legally cannot control the money.
I see. It goes back to that.
It still goes back to that, right? So Mike, that's kind of your question too, right? If you put the money in an account where the kid can access where they're older, if perhaps, Mike, you have if you and the bank have a restriction on the account that it cannot be withdrawn once it's put in there, the problem is that's very difficult with the bank. If you show up the bank and want to withdraw it, the bank's not going to stop you because
That'd probably
you're
have to be
the
more
guardian.
like almost like an IRA account or something that
Yeah,
literally
you
once you
could
put
do
it in there,
something.
you can't get it.
Yeah, you have to. There are account types like that where you literally cannot pull it out once it's put in. So you'd have to do something like that. And again, it would have to be earned income,
Hmm.
right? Performing services. So let me see. Robin, did you have a question?
Well, Mike's question answered part of mine. I have a client
Mhm.
that has a 7-year-old, and we were just talking because I'm working on their business side, but they were telling me something else kind of related to their business. But they have a 7-year-old that actually goes out and, the kids' pictures in department stores and stuff like
Mhm.
that. And then whatever they don't earn, they take pictures for their websites and their advertisements. And the balance between, this is what they told me, I don't know what the figure was, what they earned and that 13,850 or whatever is
Mhm.
what they paid them. But they put it in a trust for the benefit of her.
I mean, it may depend on how the trust is set up, right? A couple of threshold questions, right? The threshold question would have to be, is this earned income? Number one, which usually means income for services. Is it a market rate? And like I said, it's odd how everyone's market rate for their kid happens to be just under the threshold for income reporting. Somehow everybody's kid is worth exactly $13,849 for a picture. What a coincidence, right? And
Yeah,
then
well, they had all these other people paying them this child too. So there are a number of different companies, not just people, but companies that I can't talk, did the photography and put them in their
oh
advertisements and
yeah,
their,
if there are third parties involved, this is a different situation,
but then they
right?
did it on theirs and then created that balance in between the
If
last.
if there are third parties involved, you can actually come up with a value for your kid's picture because you know what third parties are paying for it,
Yeah, okay. So
right?
I
So,
need to make sure they just pay the fair market and not a whole big balance.
yeah, that's what
Big
people,
balance.
like I said, people just tend to dump a bunch of money into some account and say it's the kid's money and deduct it, right? But if there are third parties involved, if your third parties are paying your kid $200 a picture, well, now you know your kid is worth $200 a picture because you have a comparison, right? You have an actual market rate for it. And then you would really want to make sure that you're putting it into account, kind of like Mike said, where it has to be an account set up so that you are not allowed to pull it out once you put it in there.
Okay,
right?
make
As
sure
long
they
as
have
as
that.
long as the parent still has the right to pull money out of the account, it's the parent's money. And people can say, no, 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 it's my kid's money. And I'm like, but are you allowed to take it? Yeah, well, then it's your money. Right? If I find a $10 bill on the table next to me and I'm allowed to pick it up and do what I want with it, whose $10 is it?
Yours.
It's mine. It's that simple.
Okay, I'll have to ask them. Thank you.
Mm-hmm.
Um,
Oh, and good question on your bunny, right? So I have seen people do things like, well, I really want a donkey. I really wanted a pet donkey my whole life. So you know what I'm going to do is I'm going to buy a donkey and I'm going to put pictures of that donkey on my business website. And all of a sudden the donkey is tax deductible. The law doesn't work that way. Right. And it's funny to me that people go to all that trouble because, again, as small business owners, there are so many ways we can do this without getting in trouble. People go to lots of trouble to do it in ways that are sketchy. Why don't we just use all the ways to do this legally? Antoinette, people really do that. And Ann, I understand you meant it as a joke, but people are really doing it. Yeah. Mhm.
So Ian, if I have
Yeah.
a bunch of goats and I rent them out to people, say vineyards to clear up the weeds,
Mhm. Yeah.
and I charge them and they pay me, that's on the up and up.
Yeah, that's totally fine. I mean, as long as you're reporting the income.
Right.
And then, and
Okay.
people do that. Look, I mean, Norma, I spend a lot of time in the North Bay. There's a lot of people with goats and sheep who rent them out to vineyards and farmers to clear up the weeds, right? That's normal.
Right.
So
I
yeah, then
understand.
you would report the income. The vineyards are paying you for the goats. You report the income, and you also get to deduct your expenses relating to the goats, their medical care, their food, all that stuff.
Yeah.
Mhm.
So for example, the other thing real quick, sometimes at a farmer's market,
Mhm.
you'll see people with little donkeys and then the kids pay so much and they get up and they ride around there.
Mhm.
As long as the owners of the donkeys are being paid money and they report it, plus their expenses to get their donkeys there and feed them and whatever, that would work.
Yeah, yeah, people do that. Lots of people have animals as part of their business.
Okay.
Yeah. The problem that I have is people being like, I always really wanted a pony, so therefore I'm going to buy a pony and put pictures of it on my website just so I can write off the cost of the pony.
I got
Yeah. You know.
Ian,
Yeah.
about the paying the kids, for documentation, then it wouldn't it be a red flag if suddenly there was a lump sum just dumped into the
Hmm.
kid's bank account rather
Mhm.
than paid out in smaller increments over the preceding tax year? And wouldn't we also have to do then like payroll things to, employment
Well,
payroll
if
tax?
if if they're treated as employees, right? When I worked from my parents, I was definitely an employee, and they paid payroll taxes and did the whole thing, right? It was totally on the. And again, I was performing real work in the business. Like I showed up and swept floors and cleaned toilets. Nobody could say I wasn't working. So, but yeah, I think it would be a red flag if all of a sudden the account just had suddenly $13,849 deposited. That would look suspicious. Yeah.
So, there's supposedly I had always heard it's a $400 limit that a kid could earn and not have to report the taxes. So I had never heard of the 13K plus amount. So what is the difference
Yeah,
between the 400 and the 13K?
I don't know. I've never heard of the $400 one, so I'm not sure
Okay,
what that is. Yeah.
thank you.
Yeah. All right. Yeah, we kind of went through that one. So here's another one, what we call artificial intercompany loans. So let's say you live in New York, you have an LLC in New York, which has higher income tax rate. So you decide to set up a separate LLC in Nevada, where there's no income tax. You drop cash into the Nevada LLC's bank account. And the Nevada LLC has only one business operation. All it does is loan money to the New York LLC. And you're doing it at market rate, okay? But that's all the Nevada LLC does. It loans money back to your primary business. So now the New York LLC takes a deduction for the interest payments, and the Nevada LLC pays no tax, no state tax on the interest income, right? So, you know, if New York state tax is 8%, you just saved 8%. Super. Now you're just, of course, you own both LLCs, you're just loaning money to yourself. That's all that's happening. And it's magic at very little trouble. And this actually is very little trouble. You can set this up for a few $100. This is an easy thing to set up. You created a tax deduction in New York. There's no corresponding income for the Nevada LLC, and you've done it without actually having to give up cash to a third party. Right? What's wrong there? Sounds like magic. So would you go to all this trouble without the tax benefit? If there was no tax benefit, would you set up an LLC in Nevada and loan money back and forth to yourself?
No.
Yeah, probably not going to go to all that trouble. Does it seem like a circular payment?
Yep.
Yeah. You're just paying money yourself back and forth. Does a tax benefit come with a real cost to you, other than the few $100 to set it up, which is peanuts? It's no real economic outlay. Seems like magic, right? And again, there are people who will charge you money to set this up, right? They are very happy to charge you money. They'll say, hey, we understand it's a bit of a pain to set up. We'll do it for you. Don't worry, we got it. And now here's one. This one is being pushed super hard right now to the whole transformational community. They call it the irrevocable spendthrift trust. There are people actively selling this to the transformational community right now. So someone comes to you and says, for $20,000, we'll draft what we call an irrevocable spendthrift trust, and then you'll never have to pay any personal or business taxes again. Now, for some of you who have paid some large amounts of taxes or are looking to in the future, if this were real, would you be happy to write a $20,000 check to know that you just never had to pay tax again? Ever? Sure. That's great. Why wouldn't you do
It'd be a
that?
great investment.
Yeah, an incredible investment. You'd make your investment back 1,000 times over.
Yeah, but wouldn't you know that it's not on the up and up? Because if you look at who are these people offering you such a thing? If they're lawyers, are they accountants? If they're neither of those,
Oh, they are
then
all of those. They are lawyers, they are accountants. They will give you a 100-page legal opinion full of legalese and jargon and citations. It's going to look super smart. It's going to look super professional.
oh,
Right? They're going to give you this fancy thing, all this stuff from their lawyers. They are going to guarantee that you will never have to pay taxes again. And they will even say, if you get audited, you know what? We will defend you in the audit for you because we are so sure that you'll win this. Now, if you read the fine print on their guarantee, what it says is when you get audited, and I say when because you will get audited if you do this, because the IRS is actively targeting this for audit and criminal prosecution right now. So when you get audited, what happens is their guarantee only kicks in after you pay the IRS all the tax, interest, and penalties. And then you have to file a lawsuit against the IRS to try and get it back. And then they will come in and audit you or defend you in the audit. Now, of course, they know that you're not going to be able to just pay all the tax, interest, and penalties and file that lawsuit, right? So, of course, they never have to defend you. They don't defend you up front in the audit. They don't defend you when you get the initial notice. They defend you after you tell the IRS, oh my gosh, you're right, I owe it all, and you pay it all. And then you file a lawsuit. Then they'll come in and help.
but even that won't work if they're not legitimate.
It's
Right.
not legitimate, right? This has been struck down by the courts over and over. But this is one of the ones that I said that my parents got involved in something similar to this 40 years ago and got in trouble for it. And the people who set up my parents with this are now in jail,
Oh,
right? And when I was with the government, I used to send other people to jail for doing similar things. And there is a renewed push over the last year to sell this to the coaching, healing, transformational community. There's
mm.
like a new crop of scam artists who are selling this. And these are lawyers and accountants. They absolutely know that people have already gone to jail for this and they don't care. They've decided they're going to make a quick buck.
I see.
Ian, how far has the CTA put a cap on all of this kind of stuff? Surely that's got to be helpful. I mean, that's one of the ways,
Oh.
one of the reasons we did it anyway, right? So
Right. So that's a good question. So the people selling this, they're also telling you that if you buy our trust, you'll never have to file under the CTA.
oh my God.
Yeah, which is not true. Right. So then they're also getting you into a $10,000 penalty for avoiding your CTA obligation, in addition to all the other trouble they're getting you.
Oh my God, that's just crazy.
Yeah.
What's
So
the
their spiel,
CTA?
Jane, is they spend a 100-page legal opinion having a really convoluted interpretation of Section 643 of the Internal Revenue Code. A convoluted, and you won't be surprised to hear, incorrect interpretation of Section 643. Just a flat out wrong, like they just completely misread the section. Like you cannot read the section and come to their conclusion. You just can't. And the IRS has already said, again, like I said, the IRS has public notices out that say, people, please watch out for this. If you do it, we will prosecute you. So you guys have any bets on how that's how trusts actually work, right? You could set up a trust and never pay tax again. You think that's how trusts actually work?
No.
Yeah. Shockingly, it turns out that's not how they work, right? Lots of great reasons for trusts. Trusts are wonderful legal tools for lots of reasons. They are not normally tax savings tools. That is not what they do. They do other things for you. They're not normally tax savings tools. So do you guys think the government just accidentally put a code section in there that says everybody can avoid taxes forever? And then they what? Just forgot it was there? Forgot to take it out? Did they just accidentally write that in? A magic code section that says if you use magic words, you don't have to pay taxes, and then they just forgot about it?
No.
That didn't happen. The company selling you this stuff, do they have a financial interest in helping you set it up?
Yeah.
Yeah, they do. In fact, the most recent company I looked at, they're charging people $20,000 a piece, which again would be a great deal if it really did mean you never had to pay taxes again. That would be a hell of a deal. It's magic, right? Doesn't work. Don't fall for this. Again, this one is, I wanted to add this one in here. Last year when I read this webinar, I did not talk about this because it seemed so ridiculous and absurd. And it had been many years since I've seen people do it. But over the last year, I've seen people doing this a lot again. This is a renewed scam just over the last year that's coming out again. So that's why I wanted to add it in. Rob and I do. And you can too. You can always, there are tip lines for the IRS. They have tip lines. You can turn these people in. What really gets me is some of the people selling some of the scams that we've talked about today, they claim to be former IRS agents.
Wow.
Now, maybe they are and maybe they're not.
Is there any way you could ask them for proof on that? Like ask them to show you something that
I
would
don't
let you
know. I mean, you know, I tell you guys, I was a government tax prosecutor for 18 years. I'm not entirely, well, I could prove it. I could show you, I could give you links to all the legal opinions I wrote for the government. So I guess I could do that, right?
What could you do?
The cases I was involved in.
Mm.
But, you know, even, you know, in the 18 years I was there, 90% of the work I did is still confidential and privileged. I still can't talk about most of what I did. Right. I could only talk about the handful of things that do end up going public. And yeah, Robin, anybody can say they worked for the IRS or did whatever. You know, and if these people were, and Jane, well, that's the thing, Jane, even if they were, they're still selling a scam, right? If they were IRS agents, they really ought to know better.
Pretty much.
You know, and in fact, recently there was one person running a webinar selling some of the very things we've talked about this evening, claims that they were an IRS agent. They even claimed that IRS criminal investigations showed up to their webinar and signed off and said, yeah, this is all totally legal.
There's a red flag right away.
Yeah, so first of all, criminal investigations does not go up to, they don't show up to people's webinars, right? They have other things to do. Second, if they did show up to your webinar, they do not identify themselves as criminal investigations, right? Somebody does not show up to your webinar and say, by the way, I work for the IRS Criminal Investigations Division. That's not how it works. They do not have to identify themselves. They don't identify themselves. They don't tell you who they are. They'll just say, I'm Joe from Nashville or whatever, you know? And they certainly don't on your webinar say, I'm from CI and I think all this is great. No, that's not how it works. It's not a thing that happens in real life. So look, it's just easier to it's easier to thrive and follow the rules. It's so much easier to follow the rules than it is to cheat, honestly. Right? Look, we had Justice Oliver Wendell Holmes back in the day, an old Supreme Court justice. Taxes are the price we pay for a civilized society. And if you're paying a lot of tax and doing things right, right? If you're being efficient, if you're taking advantage of all the benefits available to you, and you have a big tax bill, that means you had a good year. Right? And now you don't want to overpay. You should be taking advantage of the things that you're allowed to do to reduce your taxes. But if you're doing all that and you still have a big tax bill, it means you had a good year. It's a good sign. And if you're a business owner, the tax system has chosen you as a winner. Ultimately, we do live in a capitalist society that wants business owners to succeed because that's how our economy runs. Right? So there's a whole ton of ways you can reduce your taxes legally. And it's so much easier to just do that than it is to engage in these scams, get yourself audited, get yourself in trouble, just do stuff the right way, right? Getting audited and defending yourself is really costly in time and money and emotional energy. It's a huge distraction. Tax attorneys like me charge you anywhere from $500 to $1,000 per hour to represent you in a, right? So right off the bat, it's not great. And if you engage in one of these scams, and if they determine it's an abusive transaction, it's a huge price. You owe all the back taxes that you would have had to pay anyway, plus the interest that compounds daily, plus a penalty that doubles the interest, plus a penalty that ranges from 25 to 40% of the underlying tax. So before you know it, you're paying 3 to 4 times what you would have owed if you just done the right thing in the first place. Right? So it's so much easier to just comply with the law. So get educated on the law, understand how these laws work and plan ahead. Make sure you understand how tax forms work. And knowledge really is power. Right? Stand in your tax power. Learn what you can deduct legally and how you do it. Know what income to report to stay compliant and get over that tax anxiety. Right? So this is why I have my course Tax Law Made Easy. I'm not running it live right now, but I do have the evergreen version of it out there for you guys who are interested. So this is the 19 pre-recorded videos organized into 5 modules by subject. You discover how the tax system works and learn how to plan for the future. You get practical guidance and worksheets. It goes through examples that shows you how the math works, right? So you get to see how the actual math works in it. And you can do this at your own pace, which is why I'm offering the evergreen version of this right now. In module 1, it starts with the tax theory and income. So you get to lay the foundation. You learn how the tax system actually works, learn what income you have to report to stay compliant, avoid those common mistakes. Module 2 then is about saving money. What can we deduct? How do we do it legally? What's the difference between our personal and business? What are the specific opportunities for small business owners, especially those related to our lifestyle and planning around that? Module 3, we talk about capital assets and passive activities, right? So understanding Understanding capital assets and capital gains. What do those actually mean? Learning how you can save taxes possibly on some of that, and learning about what passive activities mean in the tax context so you can avoid problems. We talk about business entities. Some of you have been through some of my deeper training on business entities. This is more of an overview on it, so you understand the important aspects of the different business entities and their tax selections. It talks about the all-important qualified business income deduction, which is a huge thing for small business owners right now. The basics of carry forwards and carrybacks. And then it gets into tax preparation and procedures. So understanding what I call the tax pipeline from beginning to end, from filing to audit to appeals, the whole thing. So when you enroll, you get instant access to the 19 videos, and you get ongoing access. So as long as I keep paying my bills, you keep getting access. I used to say lifetime access, but then I realized someday I may shut all this down, and I didn't want to promise to have to keep it up for 100 years. And some free bonuses. So those of you who sign up today with the coupon code I'm going to give you, you will get access to the spreadsheet templates for your monthly and annual profit and loss statements. These are the P&L statements that I have personally designed based on my experience as a government tax lawyer that I use in my own. So the normal prices, you can join for $177 plus 2 payments, or do the full pay option and join for 1 payment of $497. But right now through midnight Monday, I think is when it expires, you can use the coupon code Tax Law Help and get 40% off, plus get the P&L template bonuses. So I will drop some links in here. You can go to taxlawmadeeasy.com, coupon code Tax Law Help, and then if I can find it, there it is. There's also a direct clickable link that might work a little bit better in the Zoom. So any questions on any of this stuff? I mean, mostly today, I just wanted to make sure we got out the education on some of these tax scams. This is a service I do about once a year. Like I said, I periodically get pissed off at people who are selling these things, and I decide I got to get on and talk. So, Laura, yeah.
Okay, I think we might have run into a scammy account and we're gonna have to scramble to find a new one at this time. Basically, he said that it's a legal deduction to invoice our business for time we spend doing things like lawn care instead of paying someone else to do it, and time spent like editing our business's promotional videos. That we would just invoice our business for that. But again, like, where's the income? It wouldn't be income, it would just be an invoice, which then could be an expense and a deduction. And that seemed like what you might have been meaning by circular payments.
Yeah,
there.
but the business, is the business actually then paying you the money for it?
No, it would
Oh, there's
just,
no transfer. So the business is not transferring money out of its account to pay the invoice.
right, it's just an invoice that's supposedly the documentation for everything from research hours spent, working on the videos, editing time, lawn care to, keep up the house, all of this. There's no income being paid to us. We're not paying ourselves. It would just be, here we make this invoice and now we can count it as a deduction, but there's no income on the other side. That seemed really
No,
scammy.
not even close. That's just flat out, that's fraud. Sorry.
Okay.
That's tax fraud. So it's one thing, look, if you're invoicing the business and the business is then paying you and paying payroll taxes and treating you as an employee, fine, right? You can charge your business by the hour and it can pay you as an employee and deduct it, but then your business is deducting the salary to you, and then you are reporting the income as W-2. If the business is not actually paying you, there's no deduction. There has to be, with very few exceptions, a business deduction must be accompanied by an outlay of cash. That's like tax law 101 that we law, there has to be an outlay of cash.
So it has to balance out.
Yeah. Yeah. So, I mean, there are a few what we call non-economic deductions, the primary things being depreciation, right? So if your business owns a vehicle that you use for business purpose, it can depreciate the vehicle and get a deduction without outlaying cash. But that's one of the few exceptions. If you're talking about services performed for the business as an owner, well, your payment is you get the profit from the business.
Yeah. Okay, that makes sense.
Right, or the business can treat you as an employee, and if it's got an S corp election, it has to treat you as an employee. That's the law. And then your business is paying you as an employee for the services rendered, right? So the business, the business is, it's deducting the payment to you as the employee, but then you are also reporting the income as an employee.
All right, I also have a quick question.
Mhm.
Startup, for startup expenses, I got my LLC done in 2023.
Mhm.
And in 2023, I've been doing just only pro bono work. I've gotten certified, but I've just been doing pro bono work because I'm working on some personal issues.
Mhm.
Can I deduct the startup expenses in 2023, even though I haven't started charging people for it? I'm doing, trying to get the word out. I'm trying to get testimonials, successes. Would it count then as my business has started in 2023? And I can then deduct that startup income?
Yeah, you can either do it then. There is also a look back period, and I don't know what it is, right? So it may be that you can deduct the startup expenses in 2024 because they will let you look back and pull some startup expenses forward
Mm.
into the year. But the IRS does not expect businesses to make money early on, right? They know that most businesses lose money, at least on paper, early, and that's totally expected. So it's not a problem. So
Okay,
yeah.
thank you.
Mike, yeah, something like lawn care, if you're already taking a home office deduction, that's already like,
Should be encompassed in that.
that's already included in there. Yeah. So then it would be double deduction. And then like, you know, uh, Mike, I know you did a lot of work for you and Alina in your businesses. Like you can't just then invoice the business hourly and then have no outlay of cash for that. That doesn't, but if you're getting paid as an employee of the business, then you're also reporting your W-2 income. So
Mhm.
that's not a problem, right? That's totally normal. But yeah, Laura, that's interesting. I'd never heard of an accountant advising you to invoice the business for services and then not outlay cash and deduct it.
He was saying a bunch of stuff. He even was saying that when the family goes out to dinner, as long as we're discussing business at the dinner, we could deduct it. Or if I, chat with the waitress and hand her my card and try to get her as a customer while we're eating dinner. So
Yeah.
that sounded, again, too good to be true.
Yeah, that's too good to be true, right? And even then, Jane, that's funny. She wrote scam alert in the
Yeah,
chapter. Yeah. Yeah, that sounds too good to be true because it is too good to be true. That's not how the tax law works. And even then, meals and entertainment are subject to a 50% limitations on deduction. And it's, and look, I'm not I'm someone who's willing to take risks. I will sometimes push the envelope a little, but I can, that's easy for me to say because I know the system. I've been inside the system. I can push it a little bit, defend myself. But I also, when I push the envelope a little, I'm always of the mind that, okay, I know this is 50-50 and I'm pushing a little. And if I end up getting audited and lose that deduction, I'm not going to argue about it. I'm just going to pay it, right? Like I'm not going to argue with the agent and say, yeah, but I talked to the waitress about business. That's not going to fly. I'm just going to be like, fine, here's the money. Just pay the money I would have owed anyway. Don't fight it. So
can I ask a quick question? If you are married filing jointly and you each have a business, one's established and one's the new one, that's the startup. Can the loss in the new business be used to offset the profit in the other business directly? Or would it be just with the two Schedule Cs, it just works out that it will offset some of
it'll work out as an offset, right? So you might have two Schedule Cs or two 1065s or 1120s. There's a lot of different forms you use to report business income, right? But if one is making money and one is losing money and you're filing joint, the loss will net itself out in the mechanics of the tax return.
Okay, so the newbie lost business, those expenses can't be shoveled over to offset the successful business. It has to be the two separate Schedule
Yeah,
C.
file a separate schedule for the one that loses money, and then that loss will net out on your personal return. So it will still work out that the loss nets against the income. It just you have to do it right mechanically, right?
Right.
With the proper forms, and then it will work itself out. I'm all about business losses, right? A loss in business is the greatest thing in the world, tax-wise. And in fact, the sweet spot is when you figure out how to make money in your business economically while losing money for tax purposes. That's the sweet spot that you want to be in, right? Is that you're still kind of making money and doing okay, but for tax purposes, it ends up like zero or at a loss. And the scams we talked about today are not the way to get there. Those will get you audited and get in trouble. But there are other ways to do it. So
Thank you very much.
yeah, definitely. Any other questions?
Do you give a course on what you just said to her about, at the end you said, about, you can, God, I
Oh, yeah,
forgot.
actually, in the tax law made easy, we talk about lifestyle deductions, right? It's the great thing about being a small business owner is your business is your life. It's your identity.
And where is that in your teachings?
We talk about that in the tax law made easy course, and we've done it in a couple of my workshops too.
Oh, okay.
Norma, have you been through? I thought maybe you had been through the tax law. You hadn't been through that one yet?
I've been to the contract one, and there was one other one, but I haven't
Okay.
done the
You've done
tax.
some of the other ones. Yeah.
Yeah.
Yeah. So
Yeah, I go unconscious when it comes
yeah,
to
Mike,
taxes.
that's true. A good CPA, when it comes to a good CPA or a good tax lawyer, you're going to get what you pay for. Like anything else in life, right? Anything else in
Not
life.
necessarily, you don't want cheap per
You
se,
don't want cheap.
especially
Look,
when it comes to that.
if someone wants to sell you a lobster for $3, it's probably not a very good lobster, right? There's a reason I paid $100 for a lobster because I wanted the good lobster, but it's not going to be cheap. The good ones are not cheap. But I mean, I really try with my courses and workshops to set you guys up to be able to do a lot of it yourself. And then if you still have a CPA who helps you with the paperwork, because the paperwork's a pain in the ass, then that's fine. But the good here's the other thing: the good CPAs, they want you to understand this stuff and learn it because it makes their job easier, right? Because your
Well, plus-
CPA, all they can do is take the numbers you give them and do their best with it.
Plus, if you, like from your courses, if you know how to properly record, oh, wait, that's not a deduction, or this was, and I didn't know it. It's kind of like, I'm interested to see your PL sheet. I figured out one of the things in our business is the continued education. That phrase just confuses almost everybody we dealt with. So it's like professional development. It's the same thing. You're proving like, hey, I'm taking this course to get better myself. But yeah, it's like, so it's good to know that and learn that. The better your books are, of course, the easier it is for your CPA. And if anything comes down.
Oh, for sure. And that's why I give you guys my P&L statements. And you don't have to use Excel in the P&L statements. If you have QuickBooks or Quicken or Mint or whatever you use, that's fine. My P&L statements might give you ideas. I personally, it's my
Sometimes
personal
the naming.
preference. What's that?
Sometimes the naming of categories can
Yeah, the naming and it
be
shows you the
so much
names and the
easier to understand for
structure.
other people.
Yeah. So I like using Excel spreadsheets, and my P&L statements I design myself based on my experience, and that works for me, right? Other people like different things, and that's okay too. Now, I just did, look, March 15th, that's tomorrow, right, is the business tax deadline. So on Monday, I did 3 business tax returns in 2 hours. How did I do 3 returns in 2 hours? Because my P&L spreadsheets I update all year long. So it's done, the numbers are there. I'm just moving it over the return, that's it. Because once a week I go onto my spreadsheet and I update whatever happened that week. So come year's end, I'm done. And 2 hours, I got 3 business tax returns done because I didn't have to do, all the work was done already, right? So if you keep up on it, it's easy. Robin, yeah.
So, but I just yesterday picked up my 2022. I've chased my accountant for 9-10 months now to get that finished. So I'm looking for a new accountant, by the way. And he made mention, because I came from Genius Unlocked. And that's where I got my certifications for my business.
Yeah.
And I also do business coaching, and I use my law background to help in that. So I have both, and I deduct this course for that.
Mhm.
He told me I can't deduct my payments for the tuition that I paid for with Genius to get my certificates, because back in 2022, I still had a full-time job.
It's not how I view it.
Yes.
It could be a reasonable difference of opinion, but I would absolutely deduct it. To me, whether you have a full-time job or not is irrelevant.
So it's to keep up my certifications and keep up my knowledge and the new practices and stuff like that when I take these courses.
Mhm.
And I'm, of course, they're carrying me because I couldn't afford the whole thing. So I'm paying them this money. So I could have he said, because they're not accredited, I can't deduct them.
What? No, there's no, I don't know.
So
I
all
don't
that,
understand.
I mean, I did take a loss.
Yeah,
on
I would still deduct it. And look, Robin, you're paying me monthly for your subscription to me too. You should be deducting that for sure, right?
Yeah, he wouldn't let me do that either. So, and because I
Yeah,
questioned, because I
we're gonna
started in
back up a second. He
2023.
wouldn't let you.
Yeah,
He works for
he did.
you.
Well, I know. So I'm looking for a new CPA,
Yeah.
especially
He
since,
works for you. You don't work for him. He works for you.
yeah.
Right?
Well, I threw a temper tantrum on Monday to get my 2022 taxes done so I could do my 2023s.
Yeah, so
and
now you
find
can do the
someone to
2023
those.
because you got to do them. You got to do them in order and get caught up. So yeah. You
Yeah,
know, remember everybody, your tax lawyer, your tax accountant, they work for you. If you hire me as your tax lawyer, I work for you. If I won't do what you want, you find somebody else,
yeah.
right?
Well, that's what I'm doing. If you have any suggestions, please send me an email, because
I
I
don't,
don't know. I live in
unfortunately,
a very small town, so.
yeah, I have no recommendations for CPAs at this time. The handful of CPAs I know who I really like are they're not taking anybody on. So yeah,
Yeah, I
right
can't
now.
reach Brian, so he's a little
No,
hard.
yeah, well, Brian's the best in Canada anyway.
Well,
So,
he said he's US too.
oh, is he? That's right. You're right. He's getting a CPA license in the US, so he can start doing it too.
Yeah.
So,
So I have
um,
everything ready. I just need to get it to somebody.
you know, that's what TurboTax is for, and TurboTax is not perfect. It doesn't make mistakes, which is why I teach you guys how to read the returns so you can go through it. That's when I did my 3 returns in 2 hours the other day. I just did TurboTax. I didn't pay CPA to do
I
it.
should try to do that. I have a really weird
What
situation.
state are you in?
Free, so. I'm
Yeah,
sorry.
Robin, where are you?
I'm in Oregon.
Oh,
Yeah,
I was gonna say, we have a great CPA, but he's in Reno. That doesn't
Yeah.
help you in Oregon.
Yeah, well,
Yeah.
a CPA can work anywhere, for the most part. But they do have to know some, or how to get along in the Oregon tax.
Yeah,
thing.
just Robin, just get TurboTax and do it yourself. And if it's not perfect, it's not perfect. At least it's done, and at least you're making your own choices.
Okay, okay.
Yeah, that's
Oh,
what I would do.
thanks.
Yeah. Yeah, Amazon, you can get TurboTax, the downloadable version of TurboTax on Amazon, pretty cheap this time of year because it's tax season, right? It's on sale.
Okay, thanks.
Yeah, that's what I did. Jane.
I haven't actually started a business yet.
Mhm.
When I had a business, when I was consulting live locally, I actually didn't, I reported my income, but I didn't do anything fancy at all. So will this program of yours, the Tax Law Made Easy, will it help guide me through what I need to do from the beginning and like what the forms are and so on to?
From the tax perspective, it's very good for those starting business. It is not going to teach you how to like set up the company and everything. I have a different workshop that does that, but it is, so Robin's nodding because you've been through it. You've been to the live version of that one, right? So my December business formation workshop is what guides you through that. I do have a recordings version of that, so I can make sure I send you a link, Jane, if you're
Yeah,
interested.
I'm not sure I'm gonna do any of this right now. In the long run, I definitely am. I just have to figure out what to do first.
Well, learning all of this now means you can think ahead and get it right from the beginning.
Right.
Right. And I always tell people you don't have to do everything today. This is built, you build this stuff brick by brick. There's no such thing as a perfect legal foundation, a perfect tax setup, none of this is perfect. We're just doing our best.
I didn't feel quite so dumb when I heard uh, what Robin's CPA was telling her. I even know better than that. The idea that you can't deduct training is just
I
crazy.
know. Well, and it's interesting. We've seen a good range on here today already. So like Robin's CPA told her not to deduct trainings that in my mind are obviously tax deductible. And Laura, was it your CPA was telling you to deduct invoices that are not being paid, which
Yeah.
is essentially fraud, right? So you'll get them on either end of the spectrum.
Hmm.
It's good to find, if you want a CPA to help you, find someone who's fairly down the middle, who's moderate, right? Who's
Actually, I
not
have
too aggressive one way, not too aggressive the other way, and so they're in the middle and they're willing to push it a little bit one way or the other, and they have to be able to listen to you. They have to work for you. Too many CPAs think you work for them.
I have an excellent CPA. I don't know whether whether she's still doing business
Mm.
as well as individual. So I have to find that out. But
Yeah.
I'd be okay with that.
Yeah, for sure. Laura, did you have another question?
Yeah, you mentioned March 15th, but from what I understood from the business formation thing, as a single member LLC, it's passed through filing that it can file like as a sole proprietor, and then we would be doing it married filing jointly on April 15th.
Yep,
Or-
you're April 15.
Okay, and the next thing is
Yeah, March 15 is if you're filing any partnership returns or so a 1065, an 1120, an 1120S, anything like that is March 15.
okay.
Yeah.
The next thing was also training and education. So, I mean, I've been doing crystal work and
Mhm.
pendulum work pro bono for 5 years now. And now
Mhm.
I'm like, okay, I want to actually do it as a business.
Yeah.
Still, and I've got, emotion code, body code, belief code certifications and all of that. And also some of your trainings. Is any of that deductible? Because the IRS seems to be conflicting, saying, well, if it's for a new trade or a new business, you can't, but it has to still be related to the business, but it's really confusing what they say. So I don't know. And then they're talking about like a lifetime learning credit or something. How would I deduct my body code, belief code, certification training?
That to me is all part of the business you're doing, right? You're a healer,
Yeah. And
right?
now
So,
I'm doing it more organized.
yeah.
Yeah, so
Yeah.
that even though I wasn't making money because I wasn't charging in past, and it wasn't like an official business yet, does this count as new trade or new business, or it's just
It's your business. I mean, whether it's new or, it's the business you're starting and you're engaging in and you needed training to do it. To me, that's totally fine. I mean,
an
and look,
education?
the risk is they say you're not allowed to take it, in which case then you just have to pay the tax you would have owed anyway.
All right. Is it likely to be a lot? I mean, because you said compounding daily and all of that sounds really scary, or are they likely to say, okay, we see how got.
You're not going to get any penalties. I mean, they may charge interest, right? But interest is just interest. It's for time value of the money. So I don't, interest. It's like if you borrowed money from a bank, you'd have to pay interest back, right? Same thing. Right. So I don't worry too much about interest because that just is what it is. But I don't see you getting hit with penalties or anything because you're making a good faith argument. You're getting ready. And again, you may be able to call it startup costs and kind of pull it forward into 2024 too.
Yeah.
So
Oh, do you have to deduct all the startup costs in the first year, or can you also do some in the following year?
I'm not sure. I tend to, I don't know. My general rule is to accelerate deductions and delay income. So if I have a chance to take deductions, I take them.
Okay.
Right. You always accelerate deductions when you can, because people say, well, all right, so accelerating that means I save $100 this year, but then I owe it next year, so it's the same, right? No, if you save 100 this year and you owe that 100 next year, you've just made 3% on that $100.
Mm.
just because of inflation. Right? So money now is always worth more than money later, always. Especially if you have other income, you guys have other income you can offset. So yeah, offset it now. Do it, take it. I would. And look, I can't promise nothing, right? Maybe it gets audited, maybe it gets denied. I'm telling you how I would handle it, but I tend to be fine with taking these risks and making a good faith argument. Anytime I do something on my taxes, my threshold is, can I look the auditor in the face and make a good faith argument and really believe the argument I'm selling? And if I can do that, then I do it.
Mm.
I'm not going to lie, I'm not going to cheat, but if I can make a good faith argument that I personally believe, then I'm good with that.
Thank you very much. And we are going to fire that accountant and now scramble to try and find a new one.
Yeah, I've never heard of an accountant saying invoice your business, don't pay money and deduct it. That's just
Yeah. It sounded really too good to be true. So when I heard about, the topic of your webinar, I'm like,
yeah.
okay.
I might, next time I run this, I might add that in there as an example.
Thank you very much, Ian.
You bet. Mike.
So I just wanted to mention, because Laura brought up the education credits
Mhm.
with having the kids, and I
Oh.
also did classes, probably about 10 years or 15 extra continued education for myself through the university. So you do have like a lifetime and different deductions you can take for like university, if you put your mindset in that type of education versus your business.
Yeah.
So when you're looking at like a couple that you mentioned, those are deductions, but they're like, we took them with the kids, because it applied to them, but for the business, it's more like the professional or continued education.
Yeah.
I just kind of wanted to point that out.
No, and I just saw, Mike, you were asking about cash versus accrual. I'm sort of assuming that most of us are cash basis taxpayers here. If it's accrual basis, it gets more complicated. And if you do not know if you're cash or accrual, then you're cash. Yeah. Norma.
Yeah. Let me put my hand down. The IRS, the person who I give the information to and does my taxes, he has me as a counselor. He will not put energy healing because I don't think the IRS would accept that. So is that the best way to go?
It's, there is no business code for energy healer. You're in the miscellaneous code anyway, so it probably doesn't matter one way or another.
So counselor would be just
That's
probably
fine.
better.
It's not going to affect your tax calculation one way or another. So
Right.
it's not a
Okay.
big deal. Yeah, I don't worry about it.
And he uses some software program because there's so many changes. And from your experience, is that a good thing when your tax person uses a software program to handle taxes?
Yes, absolutely. Yeah, you don't want them filling it out by hand.
Okay, good.
No, it's better if they usually have more sophisticated software than we can get to, so they definitely should be using software.
Right. And he says he gets the most expensive one because it's the more involved.
Yeah,
Okay.
no, that's better. I would rather they have the good one, because remember, the people that write that software, they have a whole team of tax lawyers who are keeping up with all the changes and updates and everything.
I didn't think of that. Good. All right.
So that's what
Thanks.
you're paying for, right? That's part of why I use TurboTax also. One, because it just makes it a little easier for me, so I don't have to fill out the PDF, manually. But also, I know that Intuit has 1,000 lawyers on staff or whatever it is, and they're keeping up with changes in how the forms work, so that I don't have to, right? That's one of the things I'm paying them for.
Right.
It's for that service. Now, I still review the return before I submit it myself. Right. I like to give it a once over and make sure it looks right to me. Because, look, when I worked for the government, we used to hear all the time, I tell someone they owe tax and they'd say, but TurboTax told me to do it that way. Or my accountant told me to do it that way. And I'd say, that's nice. I don't care. You owe the money. You signed the return under penalty of perjury saying it was correct, and it was not correct. So you owe the money. I don't care if TurboTax told you to do it. I don't care if your accountant told you to do it. That's between you and them. That's not my problem, right? That's how it works. So
So on your tax, one quick question on your, the tax all made easy,
Mhm.
that you just offered. Do you cover like going over the basic 1040 sections in it?
it does not go through the returns, right? So the tax filing workshop, which I think you might have been to, Norma, so you might want to look in your library. The tax filing workshop is where we go through the return line by line. The course does not. So
Hmm.
the course is more about learning kind of the basics, the structure, how the law works. What do you have to report? What can you deduct? What are your different options? But it does not go through the actual returns line by line. That's what the
Yeah, because sometimes when I look at it, I don't know if it's right or wrong, because I don't understand.
yeah.
Yeah. And
Well,
I've,
they
I'm
just
sorry.
made the returns more complicated a few years ago too. The 1040 in Schedule C used to be the simplest things ever. And right about what 2017, 2018, with they called it the 2017 Tax Reform Act or whatever, which is a horrible name because it did not reform our tax system at all. It just changed some details to make it more complicated. But there's no reform. The last time we had actual reform of the system was 1986. So if you ever hear people say the Internal Revenue Code of 1986, and you're like, why are they saying the Internal Revenue Code of 1986? Because that was the last time the code was actually rearranged and reformed, was 1986.
Oh,
There's been no major changes since then. We've just tinkered with details. But
the
in
rule,
2017, they changed the forms to make them much more complicated than they used to be.
on PayPal, because I have a lot of people pay me on
Mhm.
PayPal. They now have what's called a 1099K.
Mhm.
It's a new one. And they wouldn't give me one because I guess I didn't qualify, but I got what I needed another way on their website, which is the income in and what they charge me, which
Yep.
is what I needed.
Yeah, that's all you need. Just go on your PayPal, download your report. It'll show the amount that comes in. You report all that as income. It'll show the fees you paid PayPal. You deduct those fees and you're good to go.
Yeah.
Yeah, that's all you have to do. That's the thing. Remember about 1099s, right? Those are just, we call those information return. That's all they are, is information.
Ah.
You have to report all the income you make. Period. Whether or not you get 1099s, whether they're wrong or right, you have to report the income you make.
Yeah, and just real quick, Venmo and PayPal, I think, is too. For 2024, I guess people aren't reporting, but if you have at least 200 clients and
Mhm.
you have an income of 20,000, then there's certain forms they give you or you ask or something. I don't know.
Yeah, they're starting to get more detailed with the forms because a lot of people, especially like Venmo, people were not reporting Venmo income. People were not reporting Zelle income. Man, people don't report income all the time. It
But if
happens.
they report it on their taxes, like I always reported on my taxes,
Yeah, then you got nothing to worry about, right?
yeah,
You're
that's
you're
right.
complying with the law. Your legal obligation is to report your income, and you're doing that. You're doing the legal and ethical thing. That's all you got to worry about.
Yeah, not whether I fit this 200 or the 20.
No, none of that is your problem. You report the income you receive, and that means you're doing the legal thing and you're doing the ethical thing. So you're good.
Yeah, and just real quick, when I talked to Venmo, I said, listen, I don't have 200 clients that paid me through you. She
Mhm.
said, this was interesting. You have to have both things to qualify for this new law. You
Oh,
have to
okay.
have 200 people and make over 20,000. If you have over 20,000, but you don't have 200 people, clients, then you don't have to comply. I go, oh, this
Yeah,
is
don't even,
too
none of that is
complicated.
your problem. That's their problem, right? That's their paperwork issue, not yours. So don't
Yeah,
even worry about it.
I just want to do it right, and help me out here, I said to them.
No,
So,
you're doing it right. You are reporting your income. That's
yep.
all you have to worry about, right? Whether
Oh,
other
good.
people report their income as, you know, I get asked every so, well, what if so-and-so doesn't report their income? And I'm like, who cares? That's not your problem, right? If they want to break the law, they can break, that's their problem. They can worry about that. It's not your
Yeah,
problem.
and it's Venmo's problem if they don't treat it as a client, because I don't know how the person paying me
Yep.
is logging on.
Don't
So
even worry about it.
yeah.
Yeah. Yeah, Mike, they're trying to capture more and more people. That's part of what the CTA stuff is too. We're finally getting serious about tax evasion and money laundering in this country. So, and it's taken years. We are behind the curve compared to other developed nations. We have not taken tax evasion and money laundering seriously until the last couple of years, and we're finally doing it because they realize that these are not victimless crimes, right? Tax evasion and money laundering, it enables violent crime, it enables sex trafficking, it enables drugs, it steals money from good hard work. These are not victimless crimes, right? They cause real harm to society. So, yeah. All right. Well, I'm gonna go make myself some dinner.
All right. Thank
Good
you.
to see all you guys
Thanks.
tonight. All right. Take care.
All right.